We are back and we are live with the 6-5 podcast. I'm here with my bestie, Daniel Newman. I rolled in at about 1 a.m. last night after being in an unnamed city for approximately 14 hours. So, 14 hours on the ground, 14 hours in flight. It is good to be back, but I would never miss the bestie pod unless I had a really good reason. Dan, how you doing this morning, buddy?
I'm doing good, Pat, and it's always good. I always tell my kids to pre-report any reason why you may stink today at your job, your life, your school, or your sport. And I like that you came straight away letting me know why you may not be the host with the most today. But look, it's part of the job, and I don't feel so sad for you. I saw the PJ you flew out on. What was that, a G6, G7? I mean, next generation plane. You got your own office. I'm just kidding. Everybody, this guy was in coach, sitting next to the guy that was that wouldn't put headphones in, so you didn't even get to sleep because some reason, people aren't, they're not doing their jobs on the plane. But Pat, what a week. I mean, you were up in some city, and we were on a call together with a CEO, and you're like, I'm not going to tell you where I am. But you were wearing the badge with the strap on it. It said exactly where we were.
You had to wonder, was that Moorhead doing a flex with that CEO or something? It's probably not, because I think that CEO has probably been in that same city visiting that same company about 1,000 times. So,
meeting with those same people.
I know. And hey, if you're new to the 6-5 podcast, first I have to ask, what's wrong? I'd love to know how you found about us. But
what's your deal?
We appreciate you being here, and we cover 6 topics, 5 minutes each, 5 to 10 minutes each. That's the asterisk. But why rename the show? Dan and I just talk until we get self-gratification that we've been heard, because that's really important to us. No, actually, we really appreciate you, and we're going to do an earnings palooza today, big time. And, we do talk about these publicly traded companies. Don't take any of this as investment advice. If you saw my portfolio, you would pretty much run away. So with
come on, man! Don't be so hard on yourself. You don't pick or buy or invest in these tech companies. So
I don't.
The reason sometimes that you and I can pick on ourselves, Pat, that we don't do better is because we end up investing in the other industries because we're not allowed to invest here, or at least we're not supposed. I don't know what the rules are exactly, but the safe rule for you and I is that we advise, therefore we don't invest, right?
And exactly. No direct investment. So all these stocks go up, and I gently weep in my Toyota Corolla. So anyways, we got a great show for you coming up. We are talking earnings palooza, Google, Microsoft, ServiceNow, Meta, Intel. I mean, it's kind of crazy, right? You see the inflation numbers come in. You see the GDP numbers come in. We've got Middle East conflict. I mean, it had to be a miracle for investors to see good in this. Dan, I am calling your number. Go.
Oh, man. Can I just make a quick comment about the GDP? Pat, you put a really great post out there. I wrote a piece about it. I was reading, how uninformed I feel like most of the world is right now. We are just a world of headline readers. That's why you really got to listen to the 6-5, because if you're just a headline reader, you see, unemployment's great. Well, they're all part-time jobs. Interest rates aren't that high. This is how high they were 20 years ago. Yeah, but wages haven't gone up nearly enough. I mean, what does it cost to own a home in most cities? People can't afford it. And, gas is $5. I saw a sign yesterday, Pat, in California, almost $8 a gallon. Now, again, is this trying to get people to move to EVs? Well, you can't buy an EV because the interest payment's going to be 12% if you want to take out a car loan. Anyway, so this is crazy.
By the way, that's 12% with good credit.
Yes. So. It's nuts. So, and let me tell you something that's really interesting, Pat, is the day before Meta had reported, we'll talk about Meta a little bit on this, and they had a good quarter, but had some, the guidance wasn't good enough, and everything fell. And then that GDP number came and everything fell. And then the question mark was basically more or less is, if Microsoft and Google don't have a good quarter, what is going to happen? And so let me just tell you that I was very worried. Thank you, Sundar. Thank you, Satya, for basically what our friend Dan Ives called as a Picasso of a quarter. I think Picasso was his terms. That guy always comes up with some good ones. And I saw his.
Hey, can I ask you, why were you concerned? Like, why do you even care?
What do I care about? What
about? Well, you said you were concerned that coming into this.
Oh my gosh, Pat, because, I don't know about you, but our businesses are fairly well tied to the tech industry's how robust it is. And the robustness of the tech industry kind of is everybody's looking up. Everybody's looking at, because it's not like the distribution of the growth of the market has been really, really spread out. It's been pretty concentrated in a small number of tech names. I mean, Google, Microsoft, and by the way, NVIDIA. I mean, if NVIDIA doesn't have a banger of a quarter, I just wonder if the whole market's sitting on stilts, just waiting. I mean, and it's hard because now what you're starting to see is some of these growth on growth. And Meta had that this quarter where it was not about, they'd had like 6 great quarters. So now they're starting to grow over growth. But Google, let me just talk about that, because this is how we end up with 10 minutes of topic, because I spend the first 4 not talking about the topic. But so Google, Alphabet, right, for everybody out there, really hit it on all cylinders. Earnings, they blew it out. $1.89 versus $1.51. Revenue beat by more than $1 billion, 80.54 against 78.59. But I'm not news reading for you, but they generated $8 billion in advertising revenue from YouTube this quarter, beating that number and growing by double digits %, by the way. They only paid like $2 billion total for YouTube. Now it generates $8 billion a quarter of revenue for the company. Here's the other one though, Pat. Google Cloud, 28% growth, $9.57 billion. This was a big one. Where were some other things that tie to the overall AI space? CapEx expenditure growth up by about $1 billion year on year. And by the way, the smallest growth year on year of all the AI companies, and we'll talk about that throughout the show. But Pat, here's another thing. They launched a dividend. Google, a growth company.
No, I know, right?
Now here's the thing, though, that's super interesting about that, though, Pat, is this good or bad? Because when companies start to become dividend companies, the question mark is always, is that because you don't expect to be able to continue growing at a fast enough rate? Or is this kind of like the super flex of Ruth Porat and the financial engineers behind the company saying, look, you can invest in growth and get a dividend. I mean, it's not a huge dividend. It was like 20 cents a share.
Yeah.
But it was still something meaningful to say, hey, we're going to pay. And by the way, they intend to pay quarterly cash dividends into the future. So this was really, really big. They also, announced a $70 billion buyback. So they're saying we got more cash to put back into the till. So they really hit it on all fronts. They're growing in all areas. The cloud business, Pat, and we mentioned this a lot after Google Cloud Next, their AI strategy is working. They've vertically integrated TPU. Now they got Axion, so they're going to get more margin. And by the way, that was probably the biggest flex that Porat said, was that she basically said something along the lines of, AI is actually going to accelerate our gross margin. And I saw this. I didn't hear if it was from her or it was a sort of a summation of something she said, but basically we don't need to spend as much because we've been doing this longer in terms of the CapEx expenditure in AI. And companies like Meta have to spend so much because they're playing catch up to what we've done, because I think that the joke or the line was because they were busy investing in virtual reality over there while we were investing in AI. But Pat, a banger of a quarter, got me back in the boat, feeling good about how things sit, rock and rolls.
Yeah, Dan, I am usually a big transcript guy. And for Google, they don't have a presentation. They don't have an immediate transcript. And 2 hours even after the call, it wasn't there. So I sent out a snarky tweet, talking about all the insights I got out about Google Cloud. But even though I got in at 1 a.m., I did go in this morning and look at the transcript, and here's what I pulled. I mean, obviously, on the income statement, we had revenue at $9.6 billion, about a 28% increase, and then almost $1 billion in profitability. So $0.9 billion, $900 million. They just keep getting more profitable. Now, in the call, right, big call outs, as you would expect on AI. 60% of funded Gen AI startups and 90% of Gen AI unicorns are Google Cloud customers. They also pointed out TPU v5b, generally available, and of course, NVIDIA's latest generation of Blackwell GPUs. The company spent almost as much time on silicon as it did the overall cloud business, which, again, semiconductors are eating the world here. And they devoted, a couple lines to Axion, the new ARM-based CPU, says it performs 50% better than compatible x86-based systems. That's pretty amazing, in this day and age to call out homegrown silicon here. Final interesting thought, they lumped YouTube and cloud. I got to tell you, for the life of me, I don't understand this at all. So listen, some advice for Google. If you want Google Cloud to be taken more seriously, don't lump it in with YouTube, a consumer property and ads. That's one thing. And secondly, have a presentation or put out the transcript or your prepared remarks out there.
They should bring Thomas on the call. Why not?
Totally. I mean, consumer ad companies, I'm not just picking on Google here. Consumer ad companies do this a lot, right? Consumer packaged goods, food companies, they don't give a lot. They force you to go to the call. That was cool like 10 years ago. Some investor relations and CFOs, hey, if you need to show up to the call to get the to the good bit. So rant over Google crushed it. I'm trying to figure out. Listen, I'm a tech industry analyst, not an equities analyst. How much of the bump is related to the dividend, and how much is related to?
Can I make a guess as a not an equities analyst?
Yes.
It was all about the growth. Yeah. They just beat it up. Actually, I think the div, if anything, maybe because that comes out of cash, so that it impacts growth. Anyways, just my guess. So,
anyways, let's move to the next topic. I'm going to call my own number here, and that is Microsoft. And Dan, where do you start on this one? I mean, they absolutely crushed it. It reminded me a lot of last quarter, which was more of the awesomeness, but given all the reasons we talked about, the confluence of issues, they had to crush it. And they absolutely did. But what a lot of people focused on was that Azure number. And what I'm going to focus on is not the growth, which was good, but 40% of Microsoft's revenue is Azure. And, I had some people try to debate with me, oh, well, server is in there. It's like, that is such a minute speck. It's not even funny. Server grew 6%. So, and the other thing is scale. We're looking at $100 billion a year scale company. That is literally the size of some of the biggest tech companies on the planet, infrastructure companies out there. And, I've worked with Microsoft almost 35 years. And, we sometimes, it's easy to forget, they were the shrink wrap software company out there. Hey, it wasn't all rosy. Personal computing not only missed the guidance, it declined 19%, right? These are PCs, this is Windows, this is gaming. Watch this space. The AI PC market hasn't really kicked off. Microsoft does not yet have an AI-enabled operating system, but Pavan made some comments at a speaking engagement when I was in CES. And by the way, Pavan runs Windows and Surface. And he basically said, we are going to change the underlying operating system to better take advantage of generative AI. And then if you read the cookie crumbs, even from Satya at the New York event that 6.5 Media was at, and he even laid the cookie crumbs out there, I'm hoping we hear more about Build that could be the growth catalyst I believe it will for the personal computing segment. Final comments here, and this has been happening for almost a year. I like to go in and count the times that Satya or Amy says they took share. And I think it was 22 times they said we took market share across Dynamics 365, Teams Phone, Edge, and US Bing. Pretty darn impressive. Now, how about Azure? I'd like to know if they believe that they gain market share in Azure. We don't know yet. But I am kind of reading the tea leaves, and I think that they did.
Well, I mean, look, taking share in all those different areas is really important. Of course, share is a little bit retrospective to how much has the market grown and how much market, especially with AI, which is there's some uncertainty to how much AI is creating in growth. The company did come out after, I didn't read it in the initial report, but then I think it was mentioned on the call itself where Amy Hood mentioned that 7% of the growth was related to AI for their Azure number. So that was 6.
It was 8% last quarter.
We stopped. It was 6. No, it was 6. So it was actually a little better. Okay. So it went up. So I think that was something I was worried about because I didn't see it initially, and I was wondering if AI had actually stalled as an impact. So it is making a bigger impact. Pat, what's also interesting though is, the day before when Meta had missed its guide just slightly, it absolutely fell off a cliff. Did you notice that Microsoft also missed its guide slightly, and yet it still went up? Now, that also just goes to show kind of the effect of some better performer around them. With like what Google had, I think the overall sentiment, not to mention the market was just looking for good news. It was just looking. I mean, you remember the market sold off down 700 points yesterday at its peak. It was a bad day for people with a 401k. Now, having said that, even though the guide was a little low, they believe they're going to hit higher margins, and therefore they would still end up hitting their EPS number, which I think was part of the reason everyone could shrug it off. But Pat, the company showed strength in Azure. I mean, I think with constant currency was over 30%, which is, again, I always hate bouncing between the constant, non-constant, because it just creates, I'm not a calculus major, but I like to talk about the calculus as often as I can. Now, the expenditures, big time tied to the NVIDIA spend. And that, by the way, is a difference with Google and Microsoft as well. Microsoft is starting the process of building its own AI accelerator. Google's much, much further along in that process and is doing, as Pat, both of you and I have tweeted about very popularly, they train their entire Gemini model on their own hardware, which is a different cap expenditure requirement. Now, I also thought it really deserved a call out. And you said this, Pat, but Dynamics, what a great number. I mean, when they're talking about taking share, they have to be talking about share from Salesforce.
I don't know. It could be HubSpot, right?
Yeah, maybe. I'm thinking more, but okay. I'll give that's a possibility, but I think they're talking about Salesforce. I think they might be talking about Oracle, and maybe SAP, because you're talking about ERP and you're talking about Dynamics, you're talking about CRM. Those are the two areas. Of course, they've got some specialties in supply chain, financial planning, analysis tools. But Pat, that was very popular. The other thing that was really, really strong was the amount of GitHub Copilot subscriptions. They are blowing everyone else out of the water on the developer side. It's not even close. It's like, I think their paid subscription to GitHub Code was like 3 times what AWS's Code Whisperer, I think it's called Code Whisperer, is. And by the way, that's a really robust product with a lot of users. So it's not like bad good. It's like good, really good is what's going on right now. Developers are turning to these tools, though, Pat. So good stuff overall from Microsoft. They had the second best earnings yesterday.
I love it, man. Hey, let's move to ServiceNow. You and I are both headed to the big conference for many, many days in our second home of Las Vegas, Nevada.
Yeah, absolutely, Pat. So look, I had the chance to spend a little time this week. I talked to Bill McDermott. By
the way, can I just time out a second? You were on pretty much you were everywhere. I mean, as I was, on planes for 10 hours and in a city for 14, you were just crushing it on there. Look at that smile. love that.
Well, it's funny because you and I go in waves. There's days I'm sitting at my desk and I'm not even traveling and I'm not doing any commentary and I'm looking at it and I'm like, wah, because I see you and I see everybody else. And then there's, like I said, it just kind of, it comes and goes. I'm saying that like it really, really comes and goes. There's days where, it's you. There's days where it's me. This week I was really busy. Next week I'll be doing a bunch of press too. Because by the way, next week's another earnings palooza. So tune into us. You're going to want more of this. But look, ServiceNow is really interesting, Pat. You're talking about a mid double digits growth company that's achieving at the top of its expectations quarter after quarter, beyond just being a very, very positive cheerleader to the market. Bill McDermott's executing, and he's really got a vision that software and the way enterprise software is built and consumed is going to completely change. Yeah. And so overall, you saw a 25% growth in the company's subscription revenue. It trades at a really, really high multiple because it keeps growing into it with every quarter that passes. But, they're seeing big growth on big deals. They saw 100% growth of their $5 million plus deals this quarter. They saw 300% growth in their $1 million plus deals this quarter. That's a really big deal when you're talking about a company that's almost entirely subscription based. And what they're basically doing is they're infusing Gen AI in every workflow across the business. So they are really the company that meets what I talked about 3 years ago when I said deflationary technology would become the hottest thing in the next wave of growth, because as we grow and we implement AI, what's effectively happening is companies are trying to figure out first how to optimize their workflows, lower their costs, accelerate revenue and growth. ServiceNow has the technology for HR, for digital experiences, for ITSM that allows companies to reduce those expenses and then drive into growth. And they're being rewarded. They're working very closely across the board with, whether it's working with NVIDIA on the front end or working with the biggest SIs on the back end. ServiceNow is powering a lot of that. And so in my conversation with McDermott, he was really doubling down on the fact that companies are turning to them to build these workflows to, as I like to say, prune to grow with their businesses. But Pat, they did guide. It was a little softer than the market had wanted, so it actually sold off. So even though the results were really good, and the company's numbers, once again, everything from their CRPO to their ACV all grew robustly. The market sold on the news, and so they are going to need to apparently grow even faster, but the results were really good, Pat. And I look forward to you and I both will be on there at their investor day. And, Bill McDermott's going to be the opening keynote speaker of our 6.5 Summit. So, tune in to hear more about that.
Yeah, I'm really looking forward to, I've never actually met Bill before, and I've never met a tech CEO I didn't like. No, I'm just kidding. Is that selfie analysis? And
well, did you take a selfie?
Well, I will. Look, maybe if he lets me.
No, I just posted that. So there's my opinion about ServiceNow, everybody.
I love that. No, ServiceNow is an incredibly interesting company, right? And they literally started doing what you would expect, hence their name, which is service, right? It was customer service, and they were the back end glue for, multiple companies, like even infrastructure providers, folks like Dell, right?
Yeah, ITSM.
Exactly. And then you take that to the next level, which is you expand the definition of service, which is we can service our field. We have FSM. We can service IT. Oh, there's ITSM, right? And then you keep doing that to the nth degree, where ServiceNow is very quickly transforming themselves into a CX play for a variety of audiences. Oh, by the way, for human resources, and then even basically a strategic dashboard, strategic portfolio management. So I'll be honest, I looked 10 years ago what the company was and where it is now. And sometimes they say, leaders at the top are the absolute, key to some sort of change. And sometimes they aren't. Bill has absolutely turn this company into this next generation company, and quite frankly, with an AI opportunity. I hear about ServiceNow with my conversations with senior management all the time. And I got to tell you, in at least customer service management and IT management, they're going to be the de facto AI driver for those enterprises. So again, look forward to the upcoming conference. Man, I'm going to just soak myself. I've never been to their conference before, and I'm really looking forward to it.
Strap in. It's always a good one. Very high energy. I expect AI to be a very popular topic this year. Don't be surprised. Beyond AI, what I'm thinking is there might also be a little bit of coverage of generative AI over there as well. And then there's possibly some stuff like machine learning, AI workflows and automation, AI empowered auto. Oh, wait, that's all AI.
Yeah, Dan's being very sarcastic right now. For those who don't know Dan,
part of being in our community is you do have to kind of start to get to know the personalities. Like I shouldn't have to explain that to you people, but that's what you get.
I don't know, man. Getting to know us better is kind of a scary thing.
You're a hard person to love, Pat.
I've been told that many times. So yeah. Hey, let's move to the next topic. SAP, ERP, giant, SCM, HRM, a lot of M's there. If you recall, SAP got a little bit of a slow start on the cloud. And that was a monkey on their back for many, many years. And there's two ways to look at this. One way is, ERP is one of the most strategic workloads on the planet. You do not want to mess with that, right? You mess with the ERP and you break something, you shut down your factory. That is not a good thing. You mess with the ERP and you can't close your books, your stock goes down 25%. I worked at a company where we had SAP in the early days, and we transitioned, couldn't close our book, and our stock went down 15 points. So you just don't want to mess around with it, right? But if you don't cloudify things, and that's private cloud, public cloud, hybrid multi-cloud, and getting into that rhythm and method, it's going to be very hard for you to move to AI. Your agility goes down. So SAP absolutely crushed it on cloud, record cloud backlog growth of 28%. Again, if you don't go to cloud and have the new bits from SAP, you're not going to be able to leverage AI. A new breakout called Cloud ERP. Now we can finally compare to Oracle Fusion and NetSuite. I like that because we like to compare because it's easy. 32% growth, and it's a 3.2 billion euro business, which means it's big. The company also announced has 27,000 customers using quote unquote business AI. I think that's pretty impressive. And of course, because everybody needs to talk about Jensen and NVIDIA on their calls, we got a watch this space from Christian Klein. So great to see cloud growth as that's the path to AI. Good to see the cloud ERP call out. What I would have liked to have seen a little bit more of was some more details on customers and the benefits they're getting from AI. X% improvements, X% efficiency from AI, a little bit more on data management, like we heard from Mark Benioff lean into on his Salesforce calls. I mean, Mark talked 75% about his data cloud. I want to hear more about that. Final comment, unlike the US, where we have this awesome non-GAAP EPS, SAP accelerated some restructuring charges from 12 months to 1 quarter. And it hit their IFS and hit their profitability. Had that been a US company, we would have ignored it and moved forward.
Whoo! All right. Look, I think SAP, IFRS stuff is tough because it made it look like the company didn't make money. Just note that in the US, the way they would do adjustments for that, you would never have probably seen or even heard about it. It would be some line item buried deeply inside of a 300-page disclosure, and it would have looked like some sort of multi dollar or whatever cent beat of EPS. Now, having said all that, the situation related to SAP, I do want to see a little bit more of a base to which to compare the cloud ERP. So, one of the things I have enjoyed about Oracle has been how prescriptive it's been with its numbers and its disclosures. But I do like the fact that we're getting closer. I've put my asks in. We've had, you and I have both had interactions with both CEO Christian Klein and Dominic SF, the CFO. Dominic was great. Right? We've got to spend some time with him. He was very approachable, and I like the fact that you have someone like that in a CFO role. The thing, though, Pat, about SAP, and you covered off a lot of what I would have wanted to say as a whole, is AI transparency is going to be critical. And by the way, part of the reason you may not be getting it is also IFRS. It's also European reporting. Is in the US, these numbers are what you have to report and how much you can validate this. Like, Pat, I really do wonder. Really do. Because like I said, I love that Amy Hood reports the 7%. Yeah. But like, how is that? Like, would you like to see how that's actually calculated? Like how they determined that AI actually created demand in a workload that maybe would have been used, for machine learning in the past or some sort of accelerated compute requirement that was already, like, how are we really deterministically creating, like with NVIDIA, it's easy. It's like every GPU is for AI. But with a Salesforce AI or with a Microsoft AI or with Google, and like if they're using it for many different things and AI is part of it, does it count? Does it count partially? Does it count entirely? But at the same time, the market's unapologetically going to move dollars in concentration into companies that can declaratively explain the role that AI is playing. So it was a good quarter. It was some good growth in the cloud space. That's the number to watch. I continue to say that's the number to watch. That's what's all about the transformation of the company. They are also going to continue to push their best AI features into the cloud. So companies that are on SAP that want benefit of SAP are going to need to move to the cloud, or they're not going to be able to get the best AI capabilities. So good quarter, good quarter, good quarter, good quarter. Am I always so positive?
I don't know. You're generally a positive guy, and you like to look at the cup as half full, which I think I do too. I mean, I think we also point out what things we would like to see that we think would improve a company, either in their products or how they talk about their company and their roadmap, just being an analyst. So let's move on to the next topic here. Unlike these enterprise companies we've been talking about, let me step back. Google's kind of a consumer company. Let's dive into Meta. Like, first of all, Dan, we usually don't cover Meta. Why are we covering Meta?
Well, we're going to cover 7 today, right? We're cheating.
Yeah, exactly. It's the 610. So we got to move.
Well, it's a 610, 7.5. But we wanted to get Meta in there, and but we still got IBM and Intel to do. So rock and roll.
Okay.
Oh, am I going first? Sorry.
Yeah, man, you're Meta, dude.
I am Meta. Well, listen, I mean, Meta. So Meta had a really good quarter, Pat, as a whole, and overall they came off beating on the top, beating on the bottom, and at the same time, the stock absolutely tanked as a result. I'm not talking about like a little bit. I'm talking about double digits. At its worst, it was down over $100, wiping out all of the company's gains year to date, or within the last several months. It was incredible. But at the same time, the results of the company were, Pat, my take, very, very strong. So, they grew, Meta grew its business, it grew its top line, it grew its advertising, it beat its earnings. But what did they do wrong? What did they do wrong? You want me
to answer the question?
Of course I wanted you to answer the question. I was having fun.
Yeah, they basically talked about how much money that they were going to spend on stuff that the street's not convinced will generate short-term returns, like AI and the metaverse.
Once again, right? Once again, Mark Zuckerberg talked about some big vision. He had to spend money, and everybody lost their freaking minds. And by the way, are you starting to see kind of the cycle here, though? It's like for a period of time, he's going to invest, and then the growth will come. Now, Reality Labs has been nothing but a dump right now. I mean, it's billions and billions of spend, but the rest of the business is so stinking profitable that it just continues to absorb it. I mean, the company delivered $471 a share of earnings on $36 billion of revenue, beat. An average, like I said, an average guide, by the way, just a slight off guide, a lot like Microsoft,
Right.
just slightly off the guide, mentioned a huge plan to spend more money, which means buying lots and lots of GPUs. Now, you do know they are building XPUs as well. So some of that spend may not all be on NVIDIA. For those out there that want to make that correlation, a lot of people do, but they are going to buy a lot of NVIDIA, no doubt about it. The company basically saw such a rampant growth in value over the last several quarters because they cut a lot of costs. They got rid of a lot of people. They cut 21,000 jobs in the first half of 2023. But having said that, the company also has some benefit coming from a potential TikTok ban. Nobody really wants to talk about that, but I have to say that in my mind, there is not a bigger beneficiary if TikTok actually gets banned. Now, again, we're not going to talk about that in its entirety on the show, but we'll talk about that philosophically on the show. Does anyone benefit more than Meta if TikTok, Meta Reels and Instagram and regular Facebook? And I mean, where do the kids go? Snap? I mean, is that even still a thing? I'm kidding. I think
the kids are off Snap. So
are they? Yeah, but your kids are like adults. I mean, all your kids are old. You're old, boomer. You boomer. But anyway,
Dan, we call it experience now. I mean, I will never hold your lack of experience against you, Dan, and your young age.
I don't believe that. I've seen you do it already. It's happened.
I'm pretty sure you're a vampire. I saw a picture of you from 15 years ago. I think that's what they use on Bloomberg. And you look exactly the same. Dude,
I would argue I look better. I fixed my teeth. I got my teeth
very different 15 years ago.
Yeah. Well, when you I jokingly tell people all the time is when you looked 40 at 20, then you still look 40 at 40. I said, I'm not sure how the next 20 years will go, but when you lose all your hair so young, it aged me super fast, and now I'm just growing into it.
Having kids early will age you. So
yes. And by the way, Botox can do all kinds of wonders. I've only done Botox once, but it can get rid of some of this crinkling I've got going on up here, and I just
sandblast my face. So
well, what's that Kardashian stuff? They inject blood, your blood. They cycle it out, and Anyways, you want to really go off topic? I read a thing that some New Mexico clinic was doing that for its customers, and they actually gave people HIV because they didn't treat the blood. There's 2 cases now. I was reading about this yesterday. So anyways, be careful with what you're doing out there, cosmetic, and where you do it. Maybe it's cheaper to do it in El Salvador, but you might want to go ahead and pay to have it done. Maybe not in New Mexico either. All right, but back to Meta. Hey, Pat, here's the biggest thing I just wonder is really is Mark Zuckerberg does need to tell people how he actually plans to make money from AI.
Yeah.
That was the only thing I thought he really missed. So, because the people I think were frustrated about the continued expense and the growth, and they wish that, the AI expenditure was all there, but we're going to keep spending and they're going to keep growing, and that's fine. But it seemed, and I listened to parts of the earnings call, he was fumbling to kind of explain where we make more money. And I think where you make more money is you create a lot of efficiencies, you get more targeting, and you can charge more premiums for ads. Now, the last thing I'll say is I love what they're doing with Llama 3. I love that on a 70 billion parameter model, they're competing with the top GPT models, and they're open sourcing everything. I mean, who freaking thunk that Meta would be the company to go all open? They got the Horizon now. They're going to be the open company for AI, and they're going to be the open company for VR.
Yeah.
They are the unapple. I guess Zuck and Cook are. They're. I guess maybe we'll see Zuck in the octagon. Do you see that? Was that a real picture of him, by the way, with the chain and the curly fro, or was that that's real?
No. That was real.
Okay, I didn't know that was AI generated, but anyways.
Okay. He did one with a fake beard. Okay, but his hair in one of them was real.
That was real?
Yeah.
Dang. All right. Looking good, Mark. Looking good. All right. I'll pass it back to you.
So I don't cover them as a consumer play, but there's a couple things I want to point out. I freaking love Zuckerberg thumbing the nose at Wall Street. And by the way, the way his shares are spec'd and the voting rights, he runs that company, and investors are kind of along for the ride. And I mean, my gosh, we saw the stock plummet when it was doing the metaverse. He pulled back, laid off a ton of people. He didn't pull an Elon with X, but he realized the efficiencies he could get, and the lights still were on, and they crushed it on ads, and his stock went up, right? And then he was out of the doghouse, and he's a freaking genius. So the play that he's running with AI is a long-term play. It's very similar to what he did with Open Compute project, which was, let's get the entire industry to standardize on hyperscale infrastructure. And what did that do? It democratized designs, and it meant that the big players wouldn't have even a bigger advantage over everybody else. That was one point. And then there's PyTorch, which essentially Facebook invented. And what that did is it gave you an open source option versus what was going on in a closed environment at Microsoft and Google. And so here we are in generative AI, where you might have to spend $1 billion to train a giant LLM.
Yeah.
And here we have Meta coming in and democratizing that. So OpenAI and Google and Microsoft's proprietary models, they don't run away with everything. So let's get a ton of developers on PyTorch. Let's get a ton of developers on Llama, and away we go. And that is not cheap, right? You're talking about 30,000 NVIDIA H100s for an extended period of time to train this bad boy, prune the data in the right way, and deploy. So here we are. I got to tell you, I've got to give the benefit of the doubt to Zuck on this. The guy's a builder, right? He's not a politician. He's a freaking builder. And I love thumbing the nose to Wall Street. And if I could direct invest, I'd probably go long.
He did sell a lot of stock recently, though. So I wouldn't say insider, but he maybe knew what he was going to say this quarter.
Yeah, and he's got to schedule that a year.
No, he does. I'm saying, I'm not saying he sold it. I'm just saying, he knows the ebbs and flows. So he's finding that out. But
yeah. So hey, let's jump into IBM. Oh, we both hit that at the same time. So
I was so excited! I finally did my job.
Finally,
first time ever. And I hit a Chiron.
Okay. No. What do you mean? We have a full production team.
All 15 producers in the background.
Yeah. Okay, producers, your job is on the line right now. No, IBM, great start, good start to the year. And Dan, you want me to up here, HashiCorp. I'm going to put HashiCorp onto the side right now. They had a good quarter. Let me break it down, right? Software on the high end of the model. OpenShift bookings are freaking on fire. 40%. That's huge. Red Hat Linux and Ansible automation up double digits. I love hybrid multi-cloud fabrics, Dan, which is why I think I'm going to like HashiCorp. But I said I wasn't going to talk about it, so I'm not going to talk about it. Infrastructure is cool now, baby. We've got Google talking about chips. We've got Microsoft talking about chips. And we've got IBM, who started it all with an integrated system, with the mainframe, everything included, single stack. And yep, IBM Z16 on-chip AI acceleration above the models. Thought this was interesting. Said 100 clients are using on-chip Telum AI. I think that is strong. We probably won't hear about the use cases because a lot of them are financial institutions, probably doing credit scoring, security, all that jazz. Storage came up. I don't remember the last time IBM actually talked about storage on a call. There's got to be some special IP bits in there, something they're doing with Spectrum that gives advantage to AI workloads. We've got pure storage. We've got vast data. They don't operate really in the big scale system markets, but I'm interested to learn more. Do you hear that, Matt, my storage analyst? Consulting, down, below expectations, but outperformed the market. Probably the most interesting thing that I thought was the call out for Microsoft Copilot. That was cool and unexpected. We'd heard about how much business they do with AWS and Azure, but the Microsoft Copilot comment was interesting. We got a cumulative number for Watson X and generative AI, $1 billion. Interestingly enough, from consulting was a lot of that, but that makes sense, right? Enterprise IT, C-suite, where do I start and how do I do it? You go to IBM Consulting, which is an on-ramp to IBM software and infrastructure. Really looking forward to IBM Think, and I'll leave the HashiCorp Oxygen in the room for you.
Yeah. So first of all, just a quick note on the results, because I know we're coming on the end of our hour here. And gosh, thank you all for spending this time with us. I just couldn't think of anything you would rather do than be with us this morning. Yeah. All right. So I mean, I've said, and I'll say it. I talked to CFO Jim Kavanaugh for a while, and he was super excited about the HashiCorp deal. He was all lit up about it. I mean, look, when you're a CFO, you're a deal maker. There's nothing. I like making deals too. There's nothing that puts a little bit more adrenaline in your system than an earnings day deal of over $6 billion. Now, the growth was a little short. The revenue, low single digit, 3% in constant currency, 1% growth. I'm dying to see how the market would respond to like a 10% quarter. The AI, the generative AI business for Watson's, in total now over $1 billion. So that's really great. I think what they're doing for the enterprise AI space continues to be very unique, very robust. And the commitment it's made to the hybrid AI, hybrid cloud, and AI strategy continues to be very consistent, which is the key. The leadership under Arvind is focus. And so the company is focused. It's maintained a growth path, which, remember, for a long time it didn't under previous leadership. Its growth is a little slower than the model, but it sees a path to the model. Kavanaugh and his team have been amazing operators, by the way. I mean, finding margin where margin doesn't exist, continuing to grow the EPS, and even when the revenue doesn't quite meet the need, the profit always does, which is good for investors, especially when you're kind of a value/growth company. I would like to see some accelerated growth across it. Like, it felt like everything, it was like 1%, 3%, 6%, 4%, 9%. Where is the big growth coming from?
Yeah.
Like, even Red Hat.
Software, the call outs on software were double digits. And then, the backlog on Red Hat was pretty phenomenal.
But, the strength is there. And then, of course, HashiCorp, in my mind, is a really great opportunity. I mean, look, Hashi it's a couple things. One is I see the HashiCorp deal as an opportunistic moment for Red Hat /IBM to play on the sort of continued uncertainty that exists in the IBM VMware space. It further ties together this multi-cloud automation, security, multi-cloud infrastructure requirements. And of course, HashiCorp has always been, in many people's opinions, not fully tapped into its potential. Now, again, folks on our team, Keith Townsend, Matt Kimball, these are the people that, we're going to be looking for some really deep analysis on the deal coming up. But as far as I see it, Pat, this ties together the company's multi-cloud strategy, and it increases the dependency that hybrid architectures require some IBM, meaning whether you're using AWS, whether you're using Google, whether you're using Microsoft at the hyperscale public cloud level, the reliance on IBM for that hybrid layer with Hashi only gets more entrenched. Red Hat plus Hashi is a very sticky sort of relationship that's going to exist between hyperscale cloud providers and IBM. So IBM's in on every deal. And despite the fact that its public cloud offering tends to be very vertically focused for like financial services and specialty cases, this will tie together and create more need for everybody to be doing business with Big Blue. So I'm encouraged by the deal, Pat. I want to sort of understand more how it works. I think from Kavanaugh, he told me it will sit in the software business unit under Rob Thomas's eyes, as opposed the CEO of Hashi will work for Rob. And so that was a little bit different than Red Hat CEO Matt Hicks, which works for Arvind. Yes. So I'm interested in seeing kind of how all that ties together, because, in my mind, to some extent, the Red Hat Hashi could almost operate as one bigger, more powerful entity. So seeing how this works is going to be something to keep an eye on, Pat. But I love the fact that it created additional stickiness for companies that are trying to make their full multi-cloud deployments work. And AI is only accelerating that.
Yeah, I'm just going to end anything, hybrid multi-cloud fabric's been talking about it forever. This is essentially enables on the side that some people look as less sexy, right? Infrastructure lifecycle management, security lifecycle management, and essentially being able to jockey workloads between any cloud you want. You want on-prem, you want sovereign cloud, AWS, Google, Azure, Oracle, whatever. And even, Terraform was a big part of this, which essentially does code provisioning depending on which cloud you're on. And then you have to have some element of connectivity and networking, which I think is interesting, and obviously security that goes in there. There were some snarky comments that I saw that, showing customer growth had trailed off. I need to double click into all of this, but I do like the fact that IBM is, anytime you can have a hybrid multi-cloud fabric and take a toll regardless of where you're running the workload. I love those. I love it for Cisco with what they're doing on the networking and security cloud. I love it on Red Hat. I like what VMware is doing as well across workloads, storage, networking, and security. So let's move on to the last topic. I am calling my number on this. Intel, baby, you clicked it, and gosh, you got to stop clicking this, man.
I didn't click anything. You're doing this yourself. No, I'm taking a nap over here. I got so bored of listening to you talk.
It's the producers. No, I know. So, listen, Intel's in a tough spot. It is the, there's the show me states and there's the show me companies. Even a slight twinge or tweak of anything out there, and people, at least the day traders, want to pile on Intel. Really good Q1, EPS beat, improved gross margins, lower than expected top line with a lower forecast. And the forecast just, I mean, are they down double digits this morning? I haven't checked. Deep single. Anyways, it was weighing on it in after hours. And I got the chance to talk with Intel CEO Pat Gelsinger before when the numbers went out. And as you would expect, he focused on positive execution. I think that's fair. Intel, it doesn't have flawless execution, right? We saw Sapphire Rapids push out. Man, that architecture was nailed 3 years before Pat came on, right? Talk about a stronger second half than first half. That's an Intel reality. That just is the way Intel works. And on a market share side, even when you might not have a good forecast, believes he did take share in market servers. His market share in servers, that's x86 and ARM, and client PCs. So, interesting part, Pat said he could have sold more Meteor Lakes. The upsides from his customers came in, but he just couldn't make it fast enough. There's two ways to look at that, which is on the plus side, hey, there's all this increased demand for Meteor Lake. That's a plus, right? That's the first AI PC platform that Intel announced. But on the negative side, why wasn't the company ready with the back end, right? I don't think it's wafers. I think it's back end. So positive to see client computing group at 30%. Data center group for this exploding data center market, not impressive. I mean, it's single digits. Like how? You can't just buy an H100 and not have a new CPU that goes with it. That's just not the way this works, right? So I don't fully understand how that number can be so low. We're going to have to wait for AMD to see what happened. I'm pretty sure ARM was down this quarter because they had built a lot, not ARM, but obviously Graviton and folks like that. So edge market in the toilet. Not surprised that the edge market, Mobileye, and Altera were not good, right? And I'm going to end here. Positive to see Intel 3, high volume manufacturing, the most sophisticated process being run in the United States today. This to me bodes well for 18A. I know the tech is different. I know the machines are different, but this is just a good sign because this means the engineers are not fixated on fixing Intel 3. They're focused on 18A, which that's going to be the difference maker. At least that's the thesis, 18A for Intel and Foundry.
Yeah. So here we go. It was a good quarter, very close on revenue, slightly above expectations on earnings. I happened to possibly be in the room where you were in the room and heard from Mr. Gelsinger as well. I might have been the fly on the wall. I don't know, whatever. But the point is that he really did reiterate, Pat, we're a second half company. So the second quarter guide sort of, maybe should have been expected because, he already was saying we're a second, that's it. By the way, this isn't this year. This is just historically speaking. They've always had a very, very strong back half of their years for somewhat obvious reasons, Pat. The 31% client growth was outstanding. That was a really great result. I don't think anyone saw that coming. The data center growth is it's just unexciting to people. I mean, you got to acknowledge, Pat, like you got these NVIDIA growth numbers, these, AMD expected growth numbers on MI. You've got Broadcom growth numbers. You've got these really strong growth numbers on all silicon for the data center. And Intel just hasn't found its mega growth. It did have some early growth a couple years back that was really, really big. Hasn't seemed to catch up yet again from that. Pat, I want Signal 65, our testing and lab performance, playing with the Intel Gaudi 3 Xeon combination to show that Intel does have the software and the hardware to do this. Of course, the abstractions and the software and OpenVINO and not having one API, not having what's the code name of the GPU? I always forget.
Falcon Shores.
Falcon Shores. Not having Falcon Shores is always going to bring up questions, but the ASIC is not. It's a little bit more flexible than just a pure. This is more XPU architecture. With Xeon, it can do a lot of the AI stuff and does it very efficiently. And there's some papers out there on it, and I'm hoping our team can get more around this. What I've really come to the conclusion is everybody wants it to be just NVIDIA, but there are a lot of players. Intel will be a player. The AI race is not over, but this is also a multi-year front to fight a battle on because the foundry business is exciting. It's necessary. It's a redundancy the U.S. needs for resiliency. But it's going to take like 3 or 4 years. And so this is a long game. I mean, if you have like a decade and you want to take a risk, like this could be a really exciting play because if the foundry business lands, and by the way, Pat, I read an article yesterday about TSMC and their toxic culture. I don't know if you saw, because we always get the same feeds. I don't know if you saw this, but the toxic culture of TSMC and how poorly that's being received here in the U.S. and that basically they can't hire and they can't build and they can't get anywhere here in the U.S. because no one wants to work in a company that basically competes to see who can send the most emails overnight. I don't know. I'm just saying. So maybe that's an opportunity for Intel, like the culture. It's a U.S. company, and it is, a company that people, at least in the U.S., should want to win. I know there's a lot of people that don't, but they should.
I've said this many times. I'm going to say it again. Here's the way I think this is going to work out. I think 18A is going to be good. Will it be as amazing as Intel says it's going to be? I don't know yet. PDKs look good out there, but watch this space. U.S. defense industry has a program that you have to go through. It's called RAMP-C. And by the way, Intel, I think, got awarded the third version of that. My expectation is that if and when Intel can show traction on 18A, we're going to see all infrastructure. What are you smiling at, buddy? What are you grinning at? All critical infrastructure will be flipped. And if you're a carrier, if you're a potentially a university, if you're a financial institution, you might have to fab that leading edge at Intel. That is my prognosis. So, and if that happens, just imagine the value creation. Because right now, Intel is getting negative valuation on Foundry, and I get it. I mean, the numbers are ugly. But gee, who thought that investing 4 years ahead, $50 billion before revenue was going to be pretty? It's not, and it's tough. So, here we are, dude. There we go. We did it. Anything else on Intel? Are you asleep?
Sorry.
I'm the most important and interesting thing about this show, Dan.
Yes, I am. Now, listen, I turned on the self view and I was having a lot of fun with myself for a minute there. So I was getting a laugh out of it, but no.
I just stare at myself the entire time. I wish I could turn the camera off, but I'm just.
You really should, because
making sure my hair is working.
Don't you sometimes entertain yourself with like the thing? I don't know. Sometimes like, I'm so sarcastic that and people say I'm dry, that I become not dry because I'm actually laughing so hard at my own jokes. I don't know. It's how it goes. But yeah.
I correct myself up often, Dan.
Wrap this thing up, man. We're like, people are asking. I don't know. I heard that people only sit on shows for like 15 minutes.
I don't know.
For the 800 of you watching the show right now, we appreciate you sticking with us for the whole hour. So I think
totally. We appreciate you. I mean, it was a great show. I mean, it was the 7, 8 here.
Yeah,
we covered Google, Microsoft, ServiceNow, SAP, Meta, IBM, and Intel. Thanks for checking in. Give us some feedback. Give the good feedback to me. Complain to Dan. We're on social media way more than we should be. We love doom scrolling.
Not more than we should be. We got to have an opinion about everything.
Should we be writing research reports?
You're an economist, selfie taker, doom scrolling.
I do prefer selfie analysis to all other forms analysis out there. Thanks. Take care. God bless you, and have a great weekend.